Hey guys, in this video, I'm going to do a tutorial on breakdown and breakout trades. So you're going to learn a new trade setup. And I'm going to review current price action afterwards to see where we're at. So if you want to trade breakdown or breakouts, then pay attention. This is something that could maybe help you. And I did a thread here. I'm going to try to follow along as best as possible. Okay, so yeah, I'm more interested in sharing concepts that are provable by examples than by using data. Because what I found is when backtesting data rarely translates to realistic live testing data, and it's more important to understand why things happen. And if you can observe that things do happen, then understand why things happen, then you can trade it. So, um, breakdown, what is a successful breakout or breakdown trade? Would be a trade that doesn't get stopped out, price never comes back to your entry, you're able to hold it for days, weeks, or months, and it runs many R multiples in your favor. So what I found is that breakdowns on a higher time frame are very effective at and breakouts and breakdowns at a high time frame are very effective at marking a change in trend or the start of a trend. And trading primarily breakdowns and breakouts on high time frame is much superior to trading on low time frame, as we're going to look into. And I believe a reason why is because when you have a breakout on a high time frame, you have a lot of swing traders, momentum traders, high time frame traders who are looking for these lines to be broken. And ideally, one of these lines is, we're on the weekly chart. It's a line that has held for many months, has helped dictate market action, has at least two touches, if not three touches, that have been respected. And you can go in a lower time frame to find a better entry and exit. But what I've found is it's helpful but not necessary. And just trading breakouts in low time frames is a totally different animal, which we'll look at, which is maybe or maybe not worth doing. So we're looking at the Bitcoin chart, and we had this insane rally that happened recently. And on this rally, if you go, there's one more from all-time high, but just looking at these major trend lines that have been respected for some of them almost a year, but many months, that have multiple touches, we can see that every time one of these trend lines broke, we had a significant rally that price did not come back to. So if we had just used the 4-hour and said, okay, if we break it, I'm going to put my stop below the most local 4-hour low, or the lowest 4-hour low, then this one would have worked. Breakout here, stop below here, with a 1.38% stop, which is quite tight, and this would have run for 25R so far. This one, a stop right underneath this candle, 0.88% stop would have ran for 38R. We have this one with a stop under this candle, a 2% stop would have ran for 13R. This one, stop could have been here, but it more makes sense to be, yeah, I guess it would have been, uh, probably you wouldn't actually use that, but maybe you would use a 2% here, runs for 10R. None of these had significant retracements. This one just blew right through. So you can see you don't even necessarily need to go to lower time frames, but we're going to see that when we go to lower time frames and don't have the high time frame, it doesn't work that well. However, we could go to lower time frames and look at lower time frame breakouts into these high time frame breakouts, and they could have provided us with even tighter invalidation and more entries. So we could have gotten an earlier entry with this trend line right here, saying when this breaks, we should be able to have our stop under here, which is a 0.6% stop, which is tighter than what we had seen previously. This one, if you had tried to use a tighter stop, you may have gotten broken out, gotten stopped out, but this one, using this first low might have worked for a 0.3% stop, something insane. This one, We could look at breakout like right here, which could have given another entry, breakout here. So you also could have taken more entries and not just entered at these high time frame breaks. But you can see that going to the lower time frame would have been helpful at getting more entries and more precise entries. Now, what I'm going to show now is after, and there was one more, which I'm going to put on the chart here. From here, this is a high time frame break from here to here. Let's get this measured correctly. So that one hasn't necessarily worked that well. Yeah. Now, if we look here, if we say this high time frame breakout failed, it's not always going to work, right? Every previous one worked. This one failed. So now if we go into this low time frame breakout where we have this and a diagonal break with a stop here, maybe wouldn't have given a very precise entry, but maybe something like this. Like it failed, it didn't work. So my point is, with all this price action, like we had one here, but for the most part, what I found is if you're trading low time frame breakouts and breakdowns, they are quite good at predicting local liquidations that will move price in your favor. Like say this one is definitely not a high time frame breakdown, but you can see, for instance, there is a short here that you could have taken that would have moved about 1.5 R in your favor before coming back to you, or depending how you set it up on the lower time frame, maybe more. But you can see that it did not predict a trend. It was only not very long before we came back to break even and were even stopped out. And there's a number of breakdown trades in here in this range that would have failed and would have come back and stopped you out. However, so these are somewhat effective at creating local, predicting local liquidations, but they're not very effective at predicting new trends forming. Those only happen on the lower time frame. That said, these could have worked only if you're there and you're watching to take profit on the first candle that moves in considerably in your favor, or uh, or you have a TP limit order, a TP limit that's just like 1 to 3 R in your favor, then it maybe could have worked. And I think there might be edge there just because you can get trade frequency. Because these high time frame breakouts happen, they're great trades. They happen very rarely. These low time breakouts, not nearly as good trades, but they happen frequently. So if you have a high time frame breakout, it makes sense to try to hold for a trend, and hold for months and high R multiple. If you have a short term breakout that does not have an important trend line, then that does not make sense. It makes sense to close probably just on the breakout. And there, I think there probably is an edge, and that's an adjustment that I need to make. Like these need to be short RR trades, but it's not necessarily worth it. I'm not sure. That's something I need to study and figure out. Now, I'm going to give you a couple more examples. One is DXY. Earlier this year, we had a break of a trend line that has been established February 22 to November 22. So it was almost a year. We had 1, 2, 3, 4, 5, 6 times. I mean, it bounced off it exactly 3 times and then sort of respected it a couple more times. You can see that as soon as this trend line broke, price never came back to this area, and it created a new trend that was straight down. So it makes sense um, to yeah, this would have worked quite well, and it would have worked well on the high time frame, but you could do it on the low time frame where you have these structures And then once it breaks, now you're looking to build a position onto this trend where maybe you can do some low time frame trades here. That would have worked. We're on the 1 hour. This one maybe wouldn't have. Maybe would have got stopped out. But, it takes multiple tries. Maybe this one works. You have this one. And that one would have come and stopped out some of these. But when this one breaks down, you could, you could be holding all of these and waiting for some sign that trend is going to change, which would be maybe if this line is pierced, then you close all your trades. But if you're trading in the low time frame, you could be sitting at 6, 13, 14, 19, like sitting on 20 OR, something like that, waiting. Well, and expecting this trend to continue. Now, another example that I'm going to give you is just this week, the stock indices broke out. I'm not trading this. Now that I know this, maybe I kind of should be, but I'm choosing to just sort of watch. But same thing, I think it makes sense now to right here with a long position here with a stop here. We don't know what's going to happen because it just happened. But yeah, there's with a 2% stop, and it would even be reasonable to enter now, but like to add on with the 3% stop under here. Say if we fake out like we did here, because it does fake out even on the high time frame. We had this. So, I mean, one thing you could do is just wait for a 4-hour close above the line, depending on how you do it, or if you want to do limit order. Although this one would have been a loss, probably, that's fine. You're going to lose some trades. But when you're getting 20, 10, 20, 30, 40, 100 R multiple, who cares? So, one other caveat, and something that I'm going to add to my thread here is, since diagonal trend lines move, the order needs to be changed often. So like you would have one like every day the level changes. So it's something that needs to be updated often. So it can create more work. I have my thread here. I'm going to make a note of that. Then we're going to go to look at the current charts. One other thing to add, since a diagonal level changes every day with respect to the current date, limit orders need to be updated often, which creates more work with these sorts of trades. Aligning the diagonal with the key horizontal is a way to avoid this. Another way, and a way that reduces fake outs, is to wait for a 4-hour close above the trend line. Wait for some kind of candle close above the trend line before entering. This can dramatically reduce the trade quite a bit. Okay. Now, also want to point out, like the only high time frame trend line I'm seeing that's breaking on major assets is S&P 500. But it's worth noting again, this happens so rarely. It happened once in the last year, and before then, what would be a high time frame trend line? Something like this maybe. It happens rarely, so it's a big shift and it's a good opportunity. But these were several good opportunities to go short, although in this case, price would have revisited some of these entries. However, if you go to a lower time frame and you just start thinking, now I'm looking for these, then it provides a lot of entries. So let's go back to Bitcoin and Ethereum and ask where we are. So Ethereum does have one high time frame trend line that is somewhat nearby, which is a trend line like this above us. Other than that, we've broken all of them, and there's nothing locally. So it's hard to say that we're going to continue to trend right now. And this isn't the only thing that dictates trend. We may or we may not. But this line is something to pay attention to. And I think just watching another key trend line develop, maybe if we pull back here or we break out and we start respecting a new line, that will give us an idea, or to pay attention to some of these lower lines that if they break later on in the year, might give some nice short opportunities. Now, we also, like, if we just go back to the bull run, like this is another great example where here's a trend line that has been respected from July 21 to May 22, almost an entire year. It has three major support bounces on it. And here, the moment price breaks, we never revisit it, and we dump extremely far. I'm just using the daily. We could have a 13-hour trade. And then similarly with Bitcoin, some of you guys remember I posted a breakdown. My friend's friend made $100,000, sorry, made $7 million. A huge R multiple on a breakdown trade from 38K. And we have this here, aligns roughly exactly at 38K. And if we were to go to a lower time frame, and look here, wait for the pump to up, back up here. Just entering at this trend line would be reasonable, but also a break here with a stop above this high would have created a pretty insane R multiple trade here, which this is how you make millions of dollars in a trade. Down to 20,000 was a 30 R multiple trade. I think he did something like that. He took one entry. Okay, so that's enough for breakout breakdown trades. And I want to take a look at where the current chart is. Now, I'm not going to go into it too much, but I've been just trading like a lot of trades and a lot of breakdown trades over the last week. Trading on my paper trading. I have negative expectancy, especially the breakout trades. I'm finding that the inside ladders have worked quite well, and would work quite well if I had been holding them. Whereas, although anything in the last week has required closing quickly because we've just chopped back and forth. So far, we haven't had a trend, and I don't think it makes sense to expect a major trend right now. But I haven't been trading these breakdown trades with quick R necessarily. And if I had, then I believe the data would look quite different. So before I quit doing breakout and breakdown trades, I'm going to try doing it with like 1 to 2 R. But you can see that these breakdowns, negative expectancy right now, not so good. But it could be better. What is the worst one? This retracement trade is an offer. The sweep into gap. What is that? Here's what I'm supposed to do. Data. Sort range. Sort sheet. Okay, let's fix this. Breakdown and breakouts. Yeah, quite negative expectancy, real bad. However, again, before I give these up, I'm gonna see if just going for 1 to 2 RR on these would maybe make it worth it, but maybe it's not worth my time. It might be worth it again because my goal has changed, and I'm less interested in catching these trends that happen once a year. I want to try to do that, but I want to have consistent small winners throughout the weeks and months to budget my life as an adult. So, um, if I can just make a couple R a week trading that, then that's something that might be worth my time. So I'm going to continue trying to do that. Now, let's go to the current charts. First, let's go back to HY block capital. So now that we're on the current charts, I'm looking at liquidity as a key driver, although liquidity is not the only thing. It doesn't necessarily predict market orders that come in and out, macro trends and so on, but it is something to pay attention to as these major players like to build their positions around key levels. So this would have been a key level to build a short position, although 25.6 is another area that larger players might be interested in either waiting for or aiming for, because at this level there's a lot of liquidations, it creates a lot of volume. So if you're trading big size, it allows you to trade against people who a lot of people will take your orders. And also if you just assume that people who are stopped out are at a disadvantage, and if you enter against them, you have an advantage. It's a good place to enter. On the yearly, 25.6, 26 continues to look hot, and I mean, it might make sense to even go to 27, 28 based on that. And the higher time frame is always most important. We go to lower time frame, even on the 6 months, it's calling for 25, 26,000 before any kind of significant pullback. So that's something to pay attention to. However, on the 3 month, it is telling also the same story, actually, that it makes sense to go to 25 or so. There's significant liquidity under the lows, but it's very unlikely we go back there for a number of reasons, but possible. Bybit's showing a hot spot at 19,200, but I don't think it has quite enough volume to be a really attractive target for people. So now on the monthly is also calling for us to go higher to this 25.6 area, 25.4. However, we're starting to build. The more time we range here, the more liquidity is built at 22 and 20.8 levels. However, I think it's quite likely that larger players do want to buy the dip in these levels, and it makes sense that they're bought up and reversed quickly. There is a lot of heat down at 16.7, 16.9. I think it's possible, but unlikely we go down there. So let's keep looking. Let's go to the 7-day now. The 7-day is just showing liquidations below us. So it might make sense for locally for price to sweep the lows of the range now. They don't have to, but it's would make sense. Now, I don't even know if it's worth looking at the 12-hour, because even if I'm trading low, yeah, it just doesn't really matter. It shows liquidations above and below, but it's hotter below. So maybe it makes sense to sweep. Let's go to a lower time frame here. We've already looked at the higher time frame. Maybe it makes sense to take the lows of the range here. Before going higher, but who knows? So it's Friday afternoon. We don't expect price to move. It has moved the last 2 Fridays. After hours, it's actually with market buying, it's actually quite noticeable that it didn't. And I'm gonna post about it. It's for Friday afternoon, and price isn't moving. The last 2 Friday afternoons, there has been intense market buying that marked the price up considerably. The lack of this buying this afternoon Something to pay attention to. It's Friday night. Okay. Okay. Now, I am in a couple trades and I want to think about them. So the first one is a short up here. I had two short orders. I split my order between two shorts. The idea that there is locally a liquidity pull lower, that this candle created a void in here where price has a decent chance of reversing. And indeed, let's go to open my paper trading. Indeed, it did fill and had a reaction, and I'm probably content to just sit in this position for now. I think it doesn't necessarily make sense to advance my stop loss because there's trading that could happen in here. I have another inside short here, and then I have a long up above, which is probably wrong because I think I'm going to cut this and I'm going to try to focus more on inside trades. I just, as a way to enter, I think I'm finding they work better. And I'm going to show you why with an example on ETH, but I would rather just wait for a big rejection and then I could take an entrance like this. I have a breakdown trade here, which I think is fine. And like I'm showing you, this is what I want to test, is it has a very quick 2R TP, and the idea is if we lose this low, it's quite likely we just lose those lows too. After that, there's no reason to think it creates a major trend. It may or may not. So it's better to just let it happen. Now, I'm okay with keeping this one for now. Maybe it's wrong, but I'm okay. I think there's some amount of edge. With the inside trades, I think it's more acceptable to hold them for longer targets. Although what I would do is if price comes in immediately comes back in, then I would close inside the range. But this allows for a chance of if price starts to break down to do nothing and get larger trades and you lock in that breakdown profit. So I'm also in a long on ETH, which was this is quite interesting actually. This was a local breakdown long, and then I have another one up here, which is it's looking at all this liquidity here and saying, this is somewhat significant. This is a decent long. We're now creating a higher level or a slightly higher time frame trend line. We are at a double level here. I think it's okay and it makes sense that if we start taking some highs, we should go higher. And there's a greater chance of trending here because there's so many liquidity levels built up. This goes back at least 1, 2, 3, 4, 5, 6, 7 days now of untouched highs. So I'm okay with leaving this. And I'm also going to say if we break above today's high, we should possibly go higher. So I'm going to try this one. Maybe I'm wrong because I'm not using a quick TP on this. Oops, I created a limit order, which canceled this long. So annoying. Yeah. So what just happened? I made 22 bucks from this. It just closed me out. So I could mark it back in right at where I entered if I want to. but let me just not do that. I think it's fine to get out because look, this was a lower time frame, and all it did was okay, check it out on a lower time frame. We broke this lower time frame trend line, which wasn't daily levels, and all it took us up to was the higher time frame trend line. So the best way to play it would have been something like this with just a very quick take profit. So, that's something I'm going to pay attention to that may or may not be worth it as a way to increase trade frequency. But these lower time frame breakouts need to be 1, 2, and 3 hour trades. Okay. This one though, if we take yesterday's high, I think it's quite likely there's a decent chance we trend. We could just run to this trend line. I think I like aiming up here on this one because this one is sort of a higher time frame idea. And we're looking at a lower time frame entry. So trying to have a relatively tight stop, but something like this. Stop market order one. I'm still wrapping my head around trading both ways, where like I'm just kind of churning. So far, I've actually lost money, but again, don't feel too bad about it because I'm just learning setups. So I have the idea of an inside long. I'm not going to do a breakout long on Bitcoin. I have the idea of an inside long here, and which didn't fill, but it's okay over the weekend maybe because the weekend's likely low volatility. And then a run the gap here on the 1 hour for a long. Although they sweep into gaps, I'm starting to like them less, and I'm going to give you an example why when we go back to the ETH long. So in the ETH long, on this is just me screwing up, which I've been doing often. I did a poke the gap long here. Long here, my stop loss was just under this trend line right here, aiming for the highs. What happens? So it looks good, except what I did, this is quite irritating. And this is a mistake, but I think is an issue with this setup is as price moved in my favor, I just advanced my stop loss under the most recent gap. And I came and you're going to see I just got barely stopped out like that. Very irritating, something that, oh, it's unlucky, but the problem with these entries is often they're not very precise. So I had an entry that was initially underwater and it was not very precise, and it made me want to advance my stop, and it prevented me from adding risk on a correlated trade. So if, for instance, I had not taken this trade, well, first of all, I should have just left my stop like this, or like this, or maybe just inside of the wick now. I should have moved it to just inside the wick and did it as an inside trade. It'd be running at 1.6 R right now, but I advanced my stop, which was incorrect. But if I had not taken this, then I could have taken an inside long instead, which would have done much better. And it might have looked something like this, where I could have had a much tighter stop loss and had like an 8R to the top of the range, something like this. Or even something like this. And to get a, it'd be running considerably in my favor. So I couldn't take this trade because I took the other trade. So it makes me think I shouldn't take the other trades because the inside longs are so much better. Now, yeah, I think, and one of the reasons why is because when I'm taking this sweep into gap trade, what I'm doing is I'm trying to predict a bottom or a pivot. I'm saying, okay, I'm looking at this gap here. I think there's liquidations under here, and people are going to market enter into here. and it's going to support price. And that's true, but I'm just guessing in a large area, so I don't get that precise an entry or don't have that tight a stop. If rather I say, okay, my thesis worked, now I can enter. That looks like a pivot point there. Let me try entering with a limit order on a retracement to one of these first gaps that happened, which also could have been in here. Although the stop loss needs to stay just within, then I could take this trade, and also I'm less tempted to advance my stop loss, so it's maybe a little bit easier psychologically, and I get double the R on this, where right now it would be running, instead of a 1.5 R, is running at 3 R. So I'm considering just stopping taking sweep into gaps because they conflict with the inside trades, which are better. Like the inside retracements, I would say from what I've observed, are by far my best trade setup. So I think I need to focus on those and avoid trades that interfere with them. Okay, now I have a breakdown short on ETH. Again, I'm aiming for a quick R, and I think it's acceptable because we have 1, 2, 3, 4 days here now, and we have a higher time frame trend line. And I'm also not trying to hold for a new trend. I'm trying to get a quick profit. So I think that is acceptable. I'm not yet interested in, I might be interested in raising this, but I think using this wick is a good place to do my entry. So we can stick with that at these Bitcoin shorts. I'm not interested in a breakdown. I guess I do have a small breakdown on Bitcoin, but again, I'm trying these quick exits, which might steer the math in my favor. Okay, that's all for today. Hope you found that useful. Much love and talk to you soon. Peace.